Well, we're coming at you with a variable rate update. This is the week of July the 25th, 2022. So a few things to be aware of here. First of all, fixed rates moving down in a pretty meaningful way. That continues to happen as a result of bond yields moving down. Do I think you should lock in? No, I'm not locking in, but if you're waiting for the point to lock in, this is as good as any. Rates might get a little lower than the fixed rate, and they definitely will over time, but we're back into the sub 4 range, and so that could be something that's interesting to you. You could definitely consider that if you're resolved that now that fixed rate is the way to go. Now's your opportunity. I've titled this video Choose Your Own Rate Adventure, though. Very specifically, if the following statements are true, because here's what I get a lot this week, is I get a lot of people going, you know what, this is what I think, and so what would you do? Well, look, there's things I think, there's things I believe are going to happen, there's things that I believe should happen, all that type of thing. So it really matters what you believe is going to happen. So I'm going to read a couple statements that I've kind of jotted down here and what I would do if I believe the statement. So A, rates will increase to curb inflation. This is a very simple response. If I believe that rates are only moving up to curb inflation, then I'm looking at that monthly inflation report, and as long as that continues to move in an upward pattern, rates will continue to go up. And I also have to believe that inflation is a bad thing, and curbing inflation at any cost is meaningful to me. That if I move rates up to decrease demand, all that type of thing, that the Bank of Canada is saying that's going to help me in other areas because it's going to decrease demand issues in other goods areas, which will benefit me in the long term. So if I believe that, that means that rates are going up until inflation changes. No time frame around that. Rates will go up while inflation changes. 2, rates will increase in preparation for a recession. This is where my mind is. Rates will increase so they have margin for a recession. And so the moment the recession seems inevitable, which I would argue we're pretty near that point, then that will stop rates increasing for the idea that rates will have to decrease at that point. Rates will have to decrease at that point. So that's what I'd be doing. I definitely know that rates will be high for 12 to 18 months, but I know that rates will move back down and I'm safer in a variable rate mortgage. Third, rates are going up because the government wants them to go up, whether that's because of their incompetence or intentional plan. Rates are going up because the government wants them to go up. I mean, to remember that all federal and political politicians, the number is about 70% of them own additional real estate. Not much of that being free and clear. We know that lower rates specifically benefits people that work in government. So likely scenarios here is that rates will be higher with the idea that people will panic, lock in, or sell, with the idea that people could come back and then pick up a lot of deals in the marketplace. If that's the case, I definitely am going to white knuckle it until that changes, because lower rates benefit government officials or government or politicians that have real estate. Lower rates benefit them from that perspective. So I'm definitely holding on to the variable, knowing that the fixed rates, that variable would come down to benefit them, and that's when it's going to be better from that perspective. Fourth thing here, if I believe that there is going to be, that I can guarantee that over the course of 5 years that I am not going to make any changes. I'm not going to get divorced. I'm not going to switch jobs. I'm not going to need money out for equity to pay debt or do renos. If I believe that life is guaranteed, and look at the last 5 years, if we could imagine where the world is 5 years down the road, that would make a pretty meaningful difference. So if I believe that, I definitely don't want to take a fixed rate, because I know that will give me a very meaningful penalty. And look, a lot of people, if they pay out their mortgages now with a fixed rate penalty, will be underwater. So those are a few statements. If I believe these statements, then I'm going to react that way. If you have not done a call with me to go through everything, and the last thing I'd say, if I cannot handle, after looking at the payments, here is the reality here. Most people are looking at the payments going, it's not perfect, but I can handle them. If I cannot handle the payments where they're at today, then I need to do something, whether re-amortizing, doing a fixed payment. We can also do it into line of credit, whatever it is, to make that payment lower for the time being. If you haven't done a strategy call with me and you want to, please do reach out. We love to chat about things, see how we can help you better. I mean, we can't change the rates, can't change the market, but we can definitely help you navigate together. We're in this all together, going through the blizzard. So please share this video, subscribe wherever you can. That really helps out. We'll talk to you soon.